All right, market just closed. It's Tuesday. Pretty exciting day today. Pretty bearish day today. Now, in the last video, we thought that we would retrace this drop here. So at least the gap, which we did, but there was no continuation. I thought there might be at least a small continuation, maybe touch former ascending line before rolling back down. To be honest, today, I'm looking at the SPY right now. There was no continuation from yesterday, which is pretty surprising because we closed at the high of day. You'd expect at least a small continuation, but then again, we had a loss of momentum before the US market opened. So we've got, I wouldn't call this a hammer. We haven't got a new low, but I mean, we pretty much closed lower than the high, hence the red candlestick. I think tomorrow we test the lows and we break below, but tomorrow I don't expect much movement until the Fed speaks. Everything is lingering on the Fed, so let's see what happens. Actually, something I've noticed is whenever the Fed speaks, no matter what they say, bearish or bullish, the market will swing both ways. And you could buy and then you could sell and make money. You could sell and then buy. You can short. I'm not recommending that. Obviously, it's just something I've noticed. It's just a total seesaw kind of move. But usually what happens is sort of 15 minutes, 30 minutes after, then you start to get your direction. So, let the markets go crazy and then let's see which way it goes. I wouldn't be surprised if we just go lower. I don't see any bullish momentum. I don't see what could do it. We've got loads of white swans, a few black swans. Uh, I really don't see a surprise peace treaty between Ukraine and Russia is not going to happen. They're having referendums at the moment. They're all going to join, Lugansk, Donetsk, Crimea. So on the Ukraine front, they're all going to join Russia. Russia's starting a new counteroffensive, so they'll take back some land. There's no peace treaty coming. They're about to declare full war mobilization, so they're going for the big win. So I don't expect any positive upside from the battlefield. Europe is already feeling it massively. We're nowhere near winter. I mean, it's just started to get cold. I'm based in Europe, and inflation's everywhere. Some countries more than others. They're already bracing their populations for, rationing. And we haven't even begun to hit the cold season. So from that side, from the European, the Eurasian side, I see no immediate positives. Everyone's hiking rates. They're ready to crash markets, whatever it takes to beat inflation. They're not going to beat inflation, but they're going to do their best. Their best. They're going to make it look like they're doing their best. Let's say if you want to kill inflation, just raise rates 10%. I mean, you'll crash everything, but you'll beat inflation. And we'll cover that too. Anyway, SPY. Bearish, didn't really close to new lows, but you can see we did test and break below the last 2 days lows. So bearish day. I think we're going to go lower, whether it happens tomorrow or, a few days later. I said it the whole time, since this move up, we sold both moves. I didn't think it would get that extended, but we hit the major strategic downtrend line. And since then, bounced here and then bounced on the ascending, flush below. And then we're just going to go, like I've said, sideways down. The Nasdaq wasn't as weak as the SPY, but there's not much difference. Same chart pattern. I call this more sideways action. Again, sideways to lower, we're going to go, in my opinion. Dow Jones sideways. You can see this is also a little weaker than the Nasdaq, and even the SPY. Well, actually, it wasn't weaker than the SPY. It just looks weaker because it went a little bit lower than the last 2 days. The Russell is finally acting as the Russell should, which is to say underperforming on red days. Although then again, it's still overall stronger. But again, you can see that too tested just a little bit below the last 2 days lows, also closed red more than the others. Percentage-wise, the VIX closed green. The VIX has had a difficult time closing above 28. In fact, it hasn't done it in a long time. Tomorrow we should see the VIX. If the markets crash, sort of slump lower, you should see the VIX, I say, close above 28 and probably test 30. I say that. How much of a move is that? Okay, it could test 30. It's probably not going to close above it, but if it does, 32 is next, and then we'll probably bump our head on this descending um, line, which hasn't been able to break out of for a long time since let's say Corona. So those are the general markets. Now, I tend to forget about the European markets. I'm not going to cover them all, but the DAX is the one. The CAC is all pretty much similar. Look at that. The CAC closed at low of day below the last couple of uh, candlesticks, basically destined for its 5,800 line. But everything counts on the DAX. The DAX closed pretty ugly. Now, for me, there are two numbers. There's 12,600, which will probably break below tomorrow. Then there's 12,400. If we break 600, we might test 400. We probably won't close below 400 on the same day. But to me, this is done. It's just looking for an excuse. Tomorrow could be the perfect excuse, although I've forgotten at what time the Fed meeting is at. Let me just check that very quickly. Pretty late, so the DAX will be closed by then. Well, anyway, we'll see. It doesn't really matter. It'll just take an extra day. So I think we're going to go test the absolute lows of the DAX, and then later this week, probably start moving below 12,400. So watch out with the DAX. Yeah, it's looking bearish. It's like I've thought the whole time, sideways to down. I don't know what day it will happen, but we shouldn't be that short term. I wouldn't short just yet. I mean, to me, the only shorts or sells you should be doing are on pops. So if you have core positions, lighten up on them. Anyway, that's the core markets. Let's look at the yields, which were even more interesting today. Now, we have a little bit of counter inversion, but it's just such little movements. It's nothing to speak of, but basically sideways on the short end. So the 1 year was actually red, 2 year only slightly green. You can see a bit of resistance here at 2%. We saw the 1 year take out 2%. Now we've seen the 2 year touch 2% pretty much. Sorry, I'm not talking about 4%. So we've seen the 1 year take out 4%. It's still above it, even after being red. The 2 year touched 4%. The 5 years take out its prior highs. And the 10 year, the most important one, has also taken out its prior highs and closed above 3.5. We were looking for that, and it did it today. It almost did it yesterday, but it definitely did it today. Very significant the day before the Fed. And obviously the 30 year is also continuing likewise, closing above best close in a long time and above its prior June highs. So you could say the yields are, more advanced than the markets. So yields are already higher than their June highs, whereas the markets are not below their June lows. So one of them will have to, it doesn't really have to, but either the markets has some catching up to do on the downside, or yields have some retracing to do on the upside, on the downside too. But I think it's the markets that are going to go down. So let's see. So that's the markets and the yields. Actually, again, I always forget about Europe, even though I'm based in Europe. Let's look very quickly. I'm not going to bother with the Japanese. They've just, relegated themselves to just Q infinity, and bond yield curve control is just disaster. Anyway, German 10 year also close. I mean, I thought this might test it this week or maybe even today, but I didn't expect it to close above it. It's a big move for the German bubble or whatever it's called. Big move, significant move. It's a 7% move. The Italian didn't move as much, but you can see it's the same direction. It was already underperforming a little bit, but they're just going to go above. They're going to go above, and the ECB is going to keep raising rates because it's nowhere near the same rate as the US, and the inflation is, I don't know, just as bad, whether you believe these government numbers or not. Just as bad, if not worse. A lot higher they must go. And so therefore, and they're not going to, I mean, all the central banks are, and they always coordinate things. You can see they've all just said, okay, we need to do it. Who cares about demand or stock prices, house prices? It's just, we need to eliminate inflation or at least reduce the exponential rise of it. So, it doesn't surprise me that these are going up, but it was significant today. So yields up. Let's see what happens tomorrow. In my opinion, just continuation. Likewise, the dollar also up, which makes sense. We were looking for a drop down, but the moves are getting pretty violent, and it's just like throwing what did they say, the baby out with the bathwater. It's just when it's market selling, just panic, or we didn't see any of that. We haven't seen panic selling for a while, although we did have a sort of that CPI day where the markets went down 4%. I would call that a bit of a panic day, but we're starting to get a little panicky, and I feel like if the DAX, the German stock market, tests its lows and breaks below, if the 10-year continues up, especially tomorrow could be a panic day. If the S&P starts to really go down and test its lows, we're going to start seeing panic selling, like people probably not waiting for their stop losses to get triggered in all the usual locations. Oh, I've got my stop in 370 or 369.98, or if you really think it's going to just get out. And I think we might get some of that. And then all of this will just lead to panic, liquidation, people getting stopped out, leveraged options. People are just, yeah, I think we'll see a bit of panic soon if we start going down here. Because imagine we start to crack this, everyone's just going to go mental. Where's the next support? Even I haven't looked at that, even though I think I'm pretty much certain that we're going to go take out 360, let's say. Next support, 320, probably obviously stop off somewhere else before then. Let's say the old 340, so the old sort of pre-corona highs, if you want to call it that. We'll see. We're not going to go there in one day. Probably not going to get there in a week. But we need to start looking at that soon. Sorry, I got sidetracked. The dollar, DXY, higher, keep it simple. When there's panic, when the yields go up, when market goes down, the dollar goes up. I do still think it's got a bit of trouble here at the 110, but it'll blast right through that when shit hits the fan. So for now, it closed pretty high, one of the highest closes in a while. I mean, besides this day. So dollar up, all the other currencies basically down. Dollar up against Japanese yen. The Turkish here is just, you don't see much here, but you just zoom out, look at this. I mean, I do feel sorry for the Turks here. It's just absolutely crazy. Also, the Chinese yuan, the dollar's been going up pretty high against that, and I think they debased recently. They cut their rates again. So yeah, dollar's going up against that. The ruble that's been basically destroying every currency. I wouldn't say this is much to discuss, not much to look into that. I feel like it will just go sideways to up, actually, even if the dollar keeps going up. But yeah, let's keep it simple. Dollar up, euro down, pound down, Japanese yen down, and even the two other commodity currencies down, which shouldn't be going down as much. So yeah, that's the currencies. Let's look at gold and silver. So gold, again, textbook day, gold down, silver down. We had our little retrace of the prior support, which has obviously become resistance, and it's just looking like we're going to go lower. Keep it simple. Obviously tomorrow we might have some crazy spike either way, so the candle might look weird, but once we have our direction, if the markets go down, if the dollar goes up, if yields go up, if Powell reiterates that he's serious and that it's going to be 75 basis points or 100 basis, especially 100, you're going to see this continue going lower. We will have to start looking at where it might go. For now, I keep it simple. Let's say 1600, even though I see sort of 1570-ish. Start putting some sort of support levels around, but that's quite a move. I don't see that happening in one day. 4% is way too much. I think even 1% is enough. But it's a bit of a gap here, a little bit of an abyss. So let's see, 1580 to 1600. I'll make it a little bigger there-ish, and I'll probably hit buy then. It's not just price, it's also time that has to be factored in. I put this massive circle here because I feel like that will be the real flush low if it gets there. Everyone's looking for a pivot. I don't think a pivot's happening for a while, but I don't think gold will go that far down because I don't think that people have correctly predicted the real inflation. The fact that, oh, the central banks are saying they're gonna fight inflation, but actually, even when they're raising rates, it's too little, too late. Even if they did 100 basis points every couple of months, it's just not enough. If you want to beat inflation, you got to go to 10% and keep it there, for a while, and that will just crash everything. So once people realize that they're not going to have interest rates high enough for long enough, and that inflation is going to persist, then they'll probably realize, oh my God, we should be in commodities, of all assets, commodities, especially gold, especially silver, especially energy, um, and all the other commodities, battery metals, wheat, and all this stuff. But yeah, I think the market hasn't understood, and it never understands, but eventually it gets it. So, but watch out, you can be insolvent quicker than the market can, whatever that quote is. So yeah, that's why I'm keeping this big circle. I feel like it will be the low of this is the March low, but we could go even low to this grand ascending line, which is very, very credible. I mean, it's hit very credible. I've seen a lot of people draw this line, but I mean, you'll find it naturally very credible. Also coincides with the resistance over here. It's just like probably 3, 4, 5 different reasons that this entire area is support. I'd be buying as soon as it touches it all the way down in sort of, I don't know, 3, 4, 5% increments. So to keep it simple, gold weak, dollar up, yields up, markets down. Gold is risk on. If everything goes down tomorrow, gold will also go down. And it does kind of make sense, with interest rates going up, even though in real terms the rate is still negative. Like right now, you've got inflation at 8%, and you've got interest rates like 3.5%, 4%. It's still negative 5%. So anyway, you have to play the game. So that's gold. Silver, although silver is down 3 times more almost than gold, still relatively strong. Look at that holding up there. It should be down here. It should already be at the yellow circle if it was to follow gold. You can see that. It would have broken its sort of double bottom attempt and then gone lower. Silver double bottom attempt, it actually did go, but then it just got so strong because it was totally oversold. So it should be there now, but we're all the way up here. So how much of a move up is that? 13, 14%. How much of a move down is it? 10, maybe more. So silver is relatively strong, even though we were down a lot. I do, and I've said this before, I think if everything goes down, silver goes down to 18, but I would buy at 18 because to me, this is a zone of relative strength, and my strategy is to accumulate silver, gold, and precious metal related stocks on the way down. I'm giving myself a lot of breathing room. So if I buy here, I wouldn't touch it for a while. It would depend on all the other markets and different elements, but I'd probably buy it then. So if I was to buy at 18, I might buy at the circle because I consider that a support zone. Then I'd probably leave it alone until 15 and then 14. I mean, if we're getting there, we're getting real crashes happening. So, and I'd probably be buying the same amount of value. I'd probably be putting $5,000 in at a time, something like that. And then as we curl down here, probably 5, 5, 5, 5, and as we turn up. So I'd probably be buying, I wouldn't be leaving that much space when we get down here. I'd be ready to buy like 5, 10, 15, 20, or within the range of 5% rather than that taking up 20%, because to me, this would be a real bounce zone. So anyway, gold and silver, bearish along with the markets, along with yields and the dollar going up. But again, silver has relative strength. So I'm looking forward to this 18. And when I say $18, I won't be buying at 18 exactly. It'll be just above 18. And I'll be buying the stocks, not the metal, silver related stocks, which fall under these two indices. Now, GDX, the ETF for more seniors, we're still in this. Now, I sold this pop. I don't want to go through all the trades, but I sold this sort of twice, let's call it, between GDX and GDXJ. Thankfully, we did come down. I bought back what I sold. I'm not going to be buying more. I bought this zone. Why would I buy it again? I bought it. I'm happy with the amount in each stock. And, stick to your plan. If we go lower, good. That's what all the other ammunition is for. Likewise, GDXJ, same sort of chart pattern, a failed breakout because the market's forced it. We're at the double bottom zone. We could go back up, but for that, I think we need the dollar to go down. We need yields to go down. We need the markets to go up. For that, we need a pivot, which won't happen. So unless we have some real, I don't know, maybe from the Ukraine war escalation, that could probably send gold up and everything down, and then it acts as a safe haven. A bit like it did when gold went all the way up to 2000, sort of Aprilish, if I'm not mistaken, which was when gold and the gold miners were going all the way up. Sorry, March. Whilst the market, sorry, so gold related assets were going all the way up in March, hitting their 2000 and something high. Whilst if we look at March, the market was basically going down, at least from April. So we could have a war related rally, but otherwise it's just going to follow the markets. So that's gold and silver related stocks. The portfolio related stocks move just like the GDXJ. So we're still in that bottom, double bottom, even triple bottom, you could say, zone. Barrett Gold, I bought at 1501 a while ago, so why would I buy? Newmont was relatively strong last 2 days. Today it sort of was relatively weak, but just sideways to me. Nothing to do here, nothing to add or subtract. Agnico Eagle, relatively strong, but it's been relatively weak, sideways. Wheaton, sideways, neither strong or weak. I would say a bit stronger than weaker. Pan American Silver, relatively strong. This surprised me. I feel like it could move up, but it would need the whole sector and the metal, the underlying metal to do that. But that was pretty strong. Closed a high of day. Pretty impressive. Mag, pretty strong. Higher lows. Triple bottom, if you want to call it that, above the ascending support. Yamana, I think it's generally found support around here on the ascending line. Goldfields has been pretty weak. It was also weak today, but still, I mean, for me personally, I don't have enough in it, so I really don't mind. I bought in the channel. I'm below my average buy, definitely, but not much, don't care. And I like the stock. I want to buy more. First Majestic came down from yesterday's move. We didn't have any follow through. A bit weak. The silvers actually were pretty weak today. Fortuna sideways. EXK sideways, not that weak. Curl d'Arlen, pretty down day, but it had a magnificent day yesterday. I sold this move. I sold early though. I sold at 305 and 329, I think it was. So the average I probably sold just above where it is now. I don't care at all. I'll buy back what I sold as long as the market doesn't look like it's going to go down. TPRFF, I bought at 246 a few days ago. This looks like a triple bottom flush, very weak, very surprising, great stock. Would love to buy some more. I don't have too much in it. No, actually, I have a little bit more than I should in that one. But by the time it goes down here, the value will be on par of what I should have. So I'd only buy down here if I think the market's going to go up. If I can get even low, I'd love that. Very sound balance sheet. It used to be an apps. I mean, look at this stock chart. It used to be a problematic stock, bad balance sheet, loads of debt. People thought it'd go bankrupt. This explains this huge drop. I would never buy a stock with this kind of a chart, but actually a very nice turnaround story, good dividend, good strategic acquisition, and all this other stuff. I don't usually get into the micro analytics of a company, but very impressed with the company as long as it's honest from the speeches and the all of the reports I've read, which I don't see why not. So if it comes down here, I think it'd be a very good idea to accumulate more. So that's why I'm surprised it's so low. And actually, this pop down here was acquisition related, so good news. And that's what happens when the markets go down. You get real opportunities. You got to be a bit of a sniper. You got to buy the right stocks at the right time. Sometimes you have to look away, even if you're swing trading. But these are long-term buys. I just swing trade to maximize the compound return. So, but pretty weak. DGLDF. Ignore the percentage move. It was basically closed today. Termalina also didn't really trade today. These are fake moves. I don't mind. I mean, if the market turns, they'll probably awaken and then move up huge. So that would be good. Fortitude, beautiful stock. I bought at 601. I wanted to buy more, didn't touch it because I thought it was weak and that we could go lower to low fives. Today we had a big flush. I didn't buy because I'm looking at the GDX, the GDXJ. I feel like it could go lower and that would take us down to low fives. Definitely, I would love to buy Fortitude, 8% dividend. That's a nice buy and hold. This is a sort of an undiscovered gem. But I feel like the charts, sometimes you have good companies but bad stock charts. This is a very strong stock chart, but it's also a very good company. I just feel like hopefully the stock breaks down. I'd love to buy more. Rain of Silver, Sideways, didn't trade much. I still think it's had a lot of good news the last few days, and I feel like I can get to 32, so no trades there. And as usual, I ignore my alternative stocks because I hardly have any in them. I don't want to mix it up with the precious metals. And also there's no point in mixing it all up. But I haven't done a video on any of these yet. I should probably do one separate video on each one. What I will cover is this little beast, Trillion Energy, commodity related oil gas stock, mainly gas at the moment. You can find it on YouTube. That's how I found it. Great stock, traded it very well. I usually show the Canadian ticker because they screwed up the US ticker. Actually, they had to suspend trading on the US ticker for a while, and that was really annoying. But actually, it just moved up in the Canadian ticker during the wait, so that wasn't bad. I've traded this so well. The only time I didn't trade it well was on this spike. I sold too early, and then I just didn't sell any on this move up because there was another US ticker at the time which showed a massive past chart price. I thought it could get to $1. Never happened. Just watch it go down. Then I started to buy, and my usual trades were good. Really really good. And recently I'd been selling this. Bought this low. Actually, I bought at 19 on TRLL. Yeah, I bought here exactly. I thought I was chasing, but I wasn't. Sold, bought, and then here I sold a lot, and then a lot more again. And actually, I bought today. That's why I'm just talking about it because I bought this today at 33.65 TILEF, and it closed a bit above. I think it's a great story. I'm not going to go into it. You should look into it yourself, but it looks very, very promising. I'd never really tout the stock, but this one I really like. So obviously, this is always just my opinion. These are just my trades. Do your own due diligence. I would be foolish to follow someone on YouTube, at least buy their stocks just because they believe in it. But I bought it. So look into it maybe if you're interested. But that's it. That'll do. That's my portfolio. Those are the markets. Those are the sectors I'm looking at. Watch out tomorrow, big day tomorrow. I think we go lower. At least after the speech, don't look at it's more important where we close. So but the markets are weak. The market's very weak. Watch out. We could have some panic selling. We could even have some limit down moments coming up if we start breaking the all-time lows in the SPY. Anyway, good luck. Keep some cash. You need cash. Cash is king. It's also a good psychological hedge. If you have cash, you look forward to drops. If you're all in, you find it difficult to sleep. So I'm going to start doing some more videos on some general rules to trading. Actually, I thought that would be really useful to complement these daily market updates. Anyway, I'll do that later. Enjoy and good luck. Thank you.